welcome to all the clients who have joined us online today. I'm going to be doing a recap of performance over the last year, as well as looking forward to what has been happening in markets and how the strategy funds are positioned. I'm then going to be joined by Ron Garan, a US astronaut, and he'll speak to us about how one gains perspective and the lessons he's learned from having that biggest perspective from space. So sometimes it's difficult to be patient. We know this in our personal lives, and when it comes to investing, that is also true. Sometimes we just want to hurry things along. But 2021 showed us a reward for being patient. As an investment team, our goal in investing your money as clients is about delivering those real returns over the long term. And part of that is about investing in growth assets. And that was very difficult in a period recently when cash was outperforming SA equity. But we stuck to our process and our philosophy, and that has been rewarded with very strong returns over the last year in particular. And then while there's been a big move to invest in passive building blocks and funds given the lower cost, we have maintained that if you can get active right, you can still add value to clients after costs. And the active management in our funds has been a big boost to returns over the last year. So it comes down to the 4 basic P's. It's about a philosophy and an approach that you stick to over time, a disciplined process, an experienced team of people making decisions for the portfolios, and then having that patient long-term investment horizon. So growth assets really were the winners over the course of last year, and led by the property sector both locally and globally. Within South Africa, property had a strong recovery as all the leverage concerns that were, top of mind coming through the crisis were mitigated by much stronger economic growth and the ability of property companies to bring those levels of leverage lower. Global property is a much more diverse asset class. It has exposure to e-commerce and logistics, and there have been some sectors within that asset class that have actually come through the pandemic with better prospects than they had 2 years ago. So strong recovery from property both locally and globally. And then equity is the core growth asset within our portfolios, and we saw very strong performance both from local equity as well as global equity. Global markets were supported by the weak currency that boosted the returns in rands. And that weaker currency over the course of last year also saw much better outcome for the performance of global cash in our portfolios, which had an outcome similar to what we had for SA bonds. So strong performance from those fixed income asset classes, and then the laggards were SA cash and global bonds, to which we had very low to no exposure. So what has been behind this very strong performance we've seen in growth assets? So if you look at the chart on the left-hand side, it shows the earnings for global equities over the last 5 years, the chart on the right for the South African counterparts. And one can see it for both charts. There was a huge slump in earnings during 2020, but that we've seen a massive recovery post that in 2021. That recovery was much larger than people had anticipated at the beginning of last year, and was behind the strong performance that we've seen within equity markets both locally and globally. So how have we been positioned in our portfolios over the last year? We've maintained a slight overweight to equity overall, and while we've maintained an overweight to global equity versus South African equity, we have moved some of that exposure from global into the SA market over the course of last year. Within fixed income, we have continued to favor SA bonds, and our exposure, particularly on the longer end of the yield curve, so to bonds with a longer duration and a higher yield, has paid off well for performance. We haven't held any global bonds, but have had a small exposure to global cash as a diversifier in the funds. In terms of property, we have maintained an underweight to domestic property, having rather favored SA bonds. But we increased our exposure to global property towards the end of the first quarter last year on better fundamentals and a valuation underpin. Through the course of the year, we've mainly held a full weight to global. We haven't made any changes to our manager lineup over the last year, but returns have really been supported by strong outcomes from the managers that we have selected. If you look at the first two lines in terms of SA equity and boutique equity, all of those 6 managers have outperformed the benchmark collectively, and for equity as a whole, we've delivered a return that was 7% ahead of the benchmark. Similarly, within SA fixed income, our managers have had a longer duration than the All Bond Index, which has also supported returns. The only building block where returns have lagged has been within global equity, where we had exposure to emerging markets. And if you followed what has happened in terms of Chinese regulations, that clearly had a negative impact on emerging market equities, and particularly Chinese equities. But overall, our managers have performed very well, and that extra outperformance has really added to the returns over and above that generated by the market. And we always like to look at the actual value add that we have delivered from the active calls and positioning that we have taken. And yeah, I've got the 3 SIS funds, the 1 to 3, 3 to 5 prudent, and 4 to 6. Each of the columns signifies the total return that has been generated on an annualized basis over the last 3 years. If we then look at the breakup of each column, the red bar is the return that has been generated by our strategic asset allocation to the various asset classes. We spend a lot of time modeling what that strategic asset allocation should be to achieve those specific real return targets for each fund. And that work has also paid off in terms of a really good outcome from that static positioning. We then actively tilt around that, and you can see the benefit from that in the blue bar from those tactical tilts versus the strategic asset allocation. And then lastly, as I've said, our managers have done really well over the last few years, and that has added materially to the outcome that clients have achieved net of all costs. So moving on to performance. Our fund range has remained fairly consistent over the last year. We've only added the Old Mutual Multi-Managers Worldwide Multi-Asset Fund, which is managed on a similar basis to the SIS 3 to 5 fund. Looking first at the SIS range of funds against inflation, one can see the strong performance across all the strategy funds. And it's pleasing to see that the more aggressive funds have actually performed very strongly versus the more conservative funds. But what that has meant is that the strong performance over not just the last year, but the last 2 years has meant that returns over longer periods, and yeah, we've got 3, 5, and 10 years, has moved up. And if we now look at a 5-year period, the strategies are mostly achieving their real return targets. Over the long term, 10 years, that is still the case with all the funds in line, at least with their targeted return. Moving on to the Old Mutual Multi-Managers range of funds, managed in exactly the same way to the SIS funds, with a lot of equivalent funds across the 2 different ranges, and again similar returns from the strategies, and again a very good outcome over the last 1, 3, and 5 years. So while achieving the real return target is at the core of what we do, we also understand that it's very important to remain competitive amongst our peers. So we've listed all of our funds on the left-hand side against the respective ASISA categories that they are listed in. And then we've ranked the funds and placed them in quartiles over the periods that are listed at the top of the chart. And it's very pleasing to see that all the funds are in the top half versus peers, with most of the funds actually being ranked in the top quartile. And then lastly, on performance, I'm just going to speak to our global range of funds. We merged the SIS Global Inflation Plus One Fund into the Global Moderate Fund the beginning of last year. So these returns are a combination of those two funds. We're going to speak to global inflation a bit later, but one can see the impact of that on the returns for the Global Moderate Fund over the last year. Whereas inflation has been very low for a long period of time globally, with very high inflation last year, and a fund that has a lower risk profile, that fund has slightly underperformed its inflation target. But if we look at periods from 3 years out, still well ahead of those inflation targets. And then moving on to the All Mutual Multi-Managers Global Growth Fund, again the SIS Global Inflation Plus 3 to 5 Fund merged into this fund in February last year, so again a combination of those returns, and for all periods the fund ahead of its inflation plus 4 target. And then lastly, the All Mutual Multi-Managers Global Equity Fund, that's a combination with the SIS Global Inflation Plus 5 to 7 Fund, which targets inflation plus 5 to 6, again ahead of its targets over all periods. So we've spent a bit of time talking about last year, but I know what will be top of mind for you today are what are the prospects for returns going forward. And it made me think about some of the predictions and the stories that we've spoken about in recent years. We've said in the past that we need some accountability for corruption, needing people to be in orange jumpsuits to see things get better in South Africa. We spoke about the difficulties of generating returns in South Africa in a low growth environment. And then I'm sure some of you have considered the fact, looking back on the pandemic in 2020, that why did we not see this coming and the severity of it coming? And if we had, we'd have been able to sell out of markets and avoid some of the downturn we saw during that period. And then the other things that we didn't speak about, like global inflation, where there was almost an expectation that inflation would stay low and that we'd continue to grapple with deflation. So if we look at what has actually happened, in South Africa we haven't seen the accountability for corruption that we would have liked, and yet we've seen the trajectory of many things improving over the last few years. If you just think of SARS, which is in a better place than it was 5 years ago, as well as Eskom, while we've still had a lot load shedding over the last few years, Eskom is predicting that the electricity availability factor will be much better in the year going forward. And then while growth was strong last year, the trajectory for growth going forward is still constrained in South Africa, and yet you've seen asset classes here deliver very good returns, and we'll speak to that in more detail. And then on COVID, I think the real challenge is that sometimes we think that if we could have predicted things well, we could have had better outcomes. There might well have been a scenario where people didn't reinvest into the markets with all the uncertainty that abounded at that point in time, and would have missed out on very strong returns in the market over the last 18 months or so. And then on inflation, that's been the big surprise, where that was something that was not even being forecast a year or two ago. So having said all of this, that predicting things is difficult, and even when you do, get it right, the outcomes can be very different. What are the things that we can anchor ourselves to? And it comes back to the basics. Ultimately, it's about achieving real returns, because that's what grows clients' capital and maintains your wealth over the long term. And how do we do that? It's by investing in assets that offer value. So it's buying the cheap assets over time and the ones that can generate returns over the long term. That brings me to the long term. What does that mean practically? If one just thinks about the last year and the predictions we were making at the beginning of last year, nobody forecast that we'd have the strong earnings growth that we've seen across markets globally. And if you hadn't had a long-term horizon and stayed invested, you would have missed out on one of the crucial years of building wealth in your portfolios. And then lastly, we don't have a crystal ball, and I'll speak to some of the risks that are at play going into this year, and therefore it's important to have diversified portfolios. But it's a balancing act, and it isn't always easy, because some of the assets that offer greater value come with higher risk. And then some assets that are more expensive, like cash today, provide diversification in a fund. So we are ultimately trying to balance the different risks in the strategies and build a balanced portfolio that can generate returns in a sustainable way. So speaking to the economic environment that we find ourselves in today, we've had a very strong recovery in growth from the pandemic, with forecasts for growth last year to be in the order of 6% globally. And if you look at returns for next year, while the IMF has recently downgraded this to 4.4%, a still very robust expectation for growth over the coming year. But we've seen some dynamics change as well through this pandemic. And people haven't been able to spend money on experiences and services, we see on the right-hand side, and instead have increased their demand for things and for goods. That outsized increase in demand for goods has seen supply bottlenecks globally, which has ultimately led to inflation. So we've seen inflation in demand for goods. This has been exacerbated by energy prices, which have also risen, by a large degree over the last year. So the Federal Reserves and central banks globally find themselves in a difficult position of wanting to sustain the recovery in growth that we've seen, but also having to get inflation under control. So the Federal Reserve in the US, which is the key central bank in terms of setting policy, has recently come out and said that they're going to be more aggressive in terms of raising rates. That has seen a lot of volatility in our markets. And we can expect that to continue through the course of this year as the tension between sustaining growth and getting inflation under control is managed. And then if we look at South Africa, the same risks are at play here, and it comes down to growth. It feels like in South Africa that we're always trying to dodge some of these risks, and we saw some of them come home to roost last year in the unrest that we saw in July. So the challenge of growth remains within South Africa. But having said that, we saw a very strong recovery from the pandemic last year, and we're expecting to be back to pre-pandemic levels of GDP by the middle of this year. And then going forward, the forecast is that we'll have close to 2% growth next year. Still not enough to generate the kind of jobs that South Africa needs and to get our debt under control. And speaking about jobs, this chart just illustrates the uneven recovery that we've seen in South Africa. The orange line shows the level of employment across our economy, and you can see how that line came down very sharply in the throes of the pandemic. Recovered somewhat and then was taken lower again in the unrest that we saw last year. In contrast, you've seen employee compensation, while it dipped during the pandemic, recover quite strongly. So while you've got this really uneven recovery, overall consumers have been in a really good space, and also supported by the relief grants that have been given by government. What has been very supportive of our economy in the last year has been the strong commodity prices that we've experienced. So this chart shows the dollar commodity prices for SA's main exports. You can see the very sharp rise that started in 2019, but really gained momentum in 2020 and 2021. And while those prices have come down somewhat, they're still sitting at historically high levels, and that should continue to provide an underpin of growth for our economy. And I'm sure you've all followed closely what has happened to the projections for debt to GDP in South Africa. The blue line shows the projections from the medium-term budget in 2020, and then how that's moved down to the time that the budget was delivered in February 2021, and then the medium-term budget at the end of last year. So stronger than expected growth has supported this debt trajectory moving lower. There's also been a revision to historical GDP, which has helped. And then lastly, fiscal discipline, which has been maintained by the government. So if you bring this all together, how are we positioned in our portfolios and what are the prospects for returns going forward? So this chart has a snapshot of valuation across all of the asset classes we are invested in. The red dots show the long-term expected real returns for each of these asset classes based on the longest history that we have going back for each asset class. The bar then gives an indication of how much value is on offer today versus those long-term expectations. And where the bar is above the red dot, asset classes are offering value. Where it's below, as asset classes are looking more expensive. So if we look at South African asset classes in dark green on the left-hand side, one can see that there's still a lot of value on offer despite the strong returns that we have seen over the last year. On the right-hand side, asset classes still look a bit more expensive globally. We've seen more value coming through from emerging markets. And I'll show in a few slides' time that within global equity, we've also seen pockets of value open up. So I'm just going to spend a little bit more time speaking to some of these asset classes in the next few slides. So if we started looking at SA bonds, I know this is a little bit of a technical chart, but it shows some very interesting developments over the last year. The blue line is the yield of our SA 10-year bond over the last 2 years. And the dotted lines show the yields of several of our emerging market peers. And while the blue line and yields shot up during the pandemic in March 2020, they've moved down quite substantially and then have been fairly stable, if a little bumpy, over the rest of that period. But I'd like you to cast your eye to the middle of the chart, to that grey line that signifies the end of 2020. And you can see at that point in time, our yields were in the region of 9%. Brazilian yields in green were at about 7%, and then Mexican bond yields were just over 5%. So a really big gap to what we were seeing in South Africa. But if you fast forward a year on, that picture has changed dramatically. As I said, while our yields have remained fairly stable, you've seen Brazilian yields kick up above ours. Russian bonds are now yielding similar levels, and Mexican bonds have picked up as well. So why have we been more stable over the last year? For one, growth has been better than predicted. There's been the fiscal discipline that I've spoken about. And inflation in South Africa has been more contained. Inflation's picked up in the last few months, mainly as a result of higher energy prices. But if you look at core inflation, that is still very well anchored. So South African bonds having, really delivered well versus their peer group. And why do we remain positive on the South African bond market? And you can see that what we've spoken about in terms of that high real yield is really what has delivered returns over the last 5 years. So the total return for the bond market is seen by the brown line at the top of the chart. And then we've broken that down into the return that has been achieved from capital versus income. And while the capital return has varied over the last 5 years from positive to negative about 1%, you've had a fairly consistent outcome from income, and that has driven the bulk of the returns over this period. So we expect that inflation will remain contained given the anchored inflation expectations we're still seeing, and that fiscal discipline will continue will also continue to be implemented. It is clearly a risk and something we monitor on an ongoing basis. But given that, we still see good real return prospects from the bond market locally. And then if we move on to the equity markets, it's a bit of a busy slide. What this graph is basically showing is the rating or the price that investors are prepared to pay for different equity markets. So you firstly have the South African market in black, and you can see how that market has derated over the last few years. We spoke about that last year. But what has been surprising is that despite the very strong earnings growth that we've seen over the last year, our market has continued to derate. Part of that is that the market is reflecting lower commodity prices, so the mining companies already reflecting that the level of commodity prices we've seen in the last few years won't be sustained. But there's also just a level of pessimism that still is, embedded into our market. So while we don't think it will be as easy to generate returns as it has been in the last year, we still think there's value on offer, and that our active managers can select opportunities within the basket of South African companies and continue to generate decent returns. And then if we move to global markets, we first of all have the blue line, which is the Emerging Markets Index. And we've spoken a bit about the weakness that we saw in Chinese equities in particular last year, and you've seen the rating on that market also come down materially over the last year. And then in the red line is the rest of the world, excluding the US. So basically, global equities, ex-US equities. And again, markets haven't fully priced in the strong earnings that we've seen over the last year and have derated over this period. The US market, however, has remained fairly stubborn in terms of valuation, and while it's derated slightly, has still remained at elevated levels. And we've seen going into this year the volatility that's being experienced in equities in general, but much more acutely in US equities that are relatively more expensive and have become more expensive versus other global equities over the course of the last year. So just moving on to how we positioned in our funds, we have no direct exposure to cash. Cash rates are rising, but real returns have still looked poor, and we've rather taken exposure through our enhanced income building block, which is a cash plus type of income portfolio that is still yielding good real returns. We still prefer government bonds and maintain an overweight, but in our more conservative portfolios, we have moved some exposure from our more aggressive, flexible fixed income portfolios into enhanced income, providing some defensiveness moving into this year. Equity is a diverse asset class. Within South Africa, while you've had very strong returns over the last year, there have been some laggards, such as Naspers, which is down in the order of 20%. British American Tobacco has also lagged. So we see some opportunity in the laggards, and we see opportunity overall because of the valuation that is still on offer in this asset class. And then lastly, looking at South African property, we have maintained our underweight. While property did very well last year as companies deleveraged, we think that there are going to be a lot of headwinds for the property sector going forward. Vacancies remain very high, particularly within the office sector. So a lot of supply with not that much demand. If we move on to asset classes globally, we've maintained a small exposure to global cash, mainly as a diversifier within the fund, but we still hold no global bonds. If we look to global equity, I spoke earlier about the fact that our global equity building block was the only asset class to underperform over the course of last year, and this was mainly due to our emerging markets exposure. But as I showed in a previous slide, you've seen the rest of the world and emerging market valuations improve over the last year. So our portfolio is underweight the US, we are overweight emerging markets and the rest of the world. So have a much better valuation underpin. We believe our managers will be able to find and invest in those pockets of value globally. We still have a small overweight to global property. Performance within global property was very strong last year. It's given back a bit of that going into this year, but fundamentals within the asset class remain strong. So investing is a long game and requires a lot of patience. We've already seen a lot of volatility this year in markets, particularly globally, and we can expect that to continue as central banks grapple with bringing inflation globally under control. But as we've seen, if we look at the actual fundamentals of the asset classes we invest in, then there is enough valuation opportunity on offer to generate returns going forward. Diversification remains key, and we remain diversified not just across asset classes, but also across managers. And so the key message today is to stay invested. It could be a bumpy ride, but we believe asset classes can continue to deliver to clients in the year and years ahead. So thank you very much for joining us today. I'm now going to hand over to Ron Garan, our US astronaut, who will be speaking to us today. Thank you.
July 20th, 1969. At some level, I realized that we had just become a different species. We were a species no longer confined to our planet, and I wanted to be a part of that group of explorers. That, I think, started me on a journey of curiosity. I think it started me on a lifelong journey to be able to fulfill that dream of one day flying in space. Bill Anders, who took the famous Earthrise photograph, said, "We went all this way to explore the moon, and what we discovered in the process was the Earth." I remember when I looked out the window, I was hit with this sense of extreme gratitude. Gratitude for the opportunity to see the planet from that vantage point, and gratitude for the gift of the planet that we've been given. It is just absolutely, indescribably, breathtakingly beautiful. I'm on this space station that was built by 15 different nations that somehow found a way to set aside our differences and work together and build probably the most complicated, complex structure ever built, and build it in space. Imagine what we could do if we could take that same level of cooperation and bring it down to the Earth's surface. I think there is something that changed in me, and I think that thing that changed is my definition of the word home. Traveling away from our hometown or our nation or our planet gives us the opportunity to look back upon ourselves and to realize what we have always been. That realization is one of the most important things that we get from exploration. Hi everyone, I'm Ron Garan, and I just want to welcome you all and welcome all the Old Mutual Wealth clients. I really appreciate this opportunity to speak with you today, and I want you all to imagine that you are on board the International Space Station and you are looking through the windowed cupola at our beautiful planet turning silently and slowly below you. Floating weightless there, in that windowed observatory, you watch as thunderstorms cast long shadows across the horizon as you approach one of our 16 daily orbital sunsets. And as you close in on that line below you, that line separating day from night, you watch as the clouds change to pink and then to red and then gray and finally black. And as you cross into the nighttime shadow of the earth, you gasp as all the lights of the cities and towns, all the evidence of human activity suddenly comes to life. You see the paparazzi like flashes of lightning storms. You experience dancing curtains of auroras that seem so close. It feels as if you could reach out and touch them. From space, I believe that you would marvel at the incredible thinness of our planet's atmosphere. And I believe that you would be struck not only by the realization that this paper thin layer of atmosphere is keeping every living thing on our planet alive, but you would also be struck by the sobering contradiction between the beauty of our planet and the unfortunate realities of life on our planet for a significant number of its inhabitants. But I also believe that seeing the planet from space would fill you with hope. Seeing the unlimited potential of what we can accomplish when we work together, as evidenced by the International Space Station itself, would extend your optimism. Your definition of home would rapidly expand to encompass Earth in its entirety, and for the first time, you might fully understand what it means to be part of one human family. Now, obviously, you don't have to go to space to realize any of this, but traveling to space started me on a journey toward a deeper understanding of the beauty of our underlying interdependent fabric of life. Separation from the natural world enabled me to become a detached witness to its splendor and unity. Again, I want to welcome you all, and I want to start off by saying thank you. Thank you for this privilege to have a conversation with you. I am incredibly excited to speak with you because the exponentially advancing world that we live in that world, business and investment decisions that we are making right now have profound implications on the future of our civilization. And I'm also excited to speak with you because the entire business and investment landscape is changing rapidly, and trends are developing that, if embraced and accelerated, can have profound positive effects on the trajectory of our society. Now, the changes we've seen are partially due to positive things like revolutionary technological advancements and innovations, new powerful ways to reach consumers and customers, an explosion of collaborative tools, some powered by blockchain and other distributed technologies. Also, AI, autonomous vehicles, rapidly increasing efficiency of the production and distribution of renewable energy, 3D printing, new materials, new sensors tied to the Internet of Things, and many, many other positive trends that together are all rewriting the fundamentals of business and investment. But the change is also caused by the disruption and uncertainty that is all around us. I know that in South Africa, you are all facing significant challenges, as is most of the world. We are living through very uncertain times, and there are many factors impacting business operations, everything from pandemics with the associated lockdowns and travel bans to corruption, political divisions, and gridlock, to high unemployment and inflation, to trade wars, to refugee crisis, to terrorism, and much, much more. Now, these changes and uncertainty can cause us to shrink and become more conservative in our approaches, or we can see them as opportunities. In order to successfully capitalize on the opportunities that are all around us, we need to take a holistic approach and strive to see how everything fits together. We need to understand that protecting the environment, overcoming social challenges, and moving our businesses forward are not mutually exclusive. In fact, they are complementary. We can take an environmentally sustainable and socially conscious business approach while developing new and exciting products and services, creating more jobs, and increasing profitability and shareholder value. Above all else, we need to understand that as daunting and significant as all this uncertainty and all these changes are, they are just the tip of the iceberg. We are entering into a new human epoch where everything will change, especially how we conduct business and how we tackle the problems facing our planet. Now, one of the best ways to navigate the uncertainty that's all around us is through collaboration. Collaboration that leads to shared strength. The way to see the path forward and the focus of our discussion today is to zoom out to a higher vantage point, a vantage point where all the pieces of the puzzle come into view and we can see who has them and what picture they paint for our businesses and our society as a whole. Now, over the course of my career, I've had the opportunity to have some amazing experiences. And these experiences have provided me a very unique, big picture perspective of our planet. The purpose of our discussion today is to put all these changes that we've seen in the business landscape into a big picture perspective. I want to put them into an orbital perspective. And in doing so, trends, truths, and the path forward becomes clearer. To illustrate this basic fact, I want to take you on a trip to space and back. Now, I wanted to be an astronaut since I first saw the first moon landing back in 1969. But that dream was realized about 4 decades later when I, along with the crew of STS-124, launched into space aboard Space Shuttle Discovery. And on the day of launch, we all climbed into our spacesuits, and I remember leaving the crew quarters and boarding the Astro van, waving to everybody as we stepped out. We made our way to the launch pad, and one by one, we took turns climbing through the hatch and into our seats. And after we were all strapped in, I had a little bit of time to think. There I was, lying on my back, strapped to about 4.5 million pounds of explosives. And it's one of those wonderful moments that life gives you for self-reflection. And I briefly wondered what I was getting myself into. And right in front of me was a digital clock in the center of Discovery's control panel. And as it counted down within a minute, I got ready for the main engines to light. And as it got below 10 seconds, I prepared for liftoff.
Positive. CLS is go for main engine start.
6 seconds, main engine start. 3 coming up.
3, 2,
3 to 100. Hang on.
booster ignition.
102,
Liftoff.
102.
Shuttle Discovery.
Auto.
Mate Kudasai. Best
I
of luck
see
to
3
the
at 104. I see a command and a roll.
Houston, Discovery, roll program.
I am LVLH.
Roger roll, Discovery.
Houston now controlling the flight of Discovery, a man-made rising sun.
Oh, what a view up the side.
All right, the digitals.
At 8.5 minutes after launch, the engines abruptly shut down according to plan. Inside the spacecraft, we all went from feeling 3Gs, like feeling like an elephant was sitting on our chest, pushing us back into our chair, to being weightless instantly. And at that point, I thought to myself, we made it. But I was also acutely aware that my childhood dream of flying in space had just come true. Now, although going to space was an incredibly overwhelming visual experience, it was also much, much more than just a visual experience. What I experienced in space was an immense sense of gratitude. Gratitude for the opportunity to see the Earth from the vantage point of space, and for the gift of the planet that we've been given. And in some way that I don't think I'll ever be able to fully explain. Being physically detached from the Earth made me feel deeply interconnected and interdependent with everyone on it. From space, I was able to look back and see what we have always been. One single human family with a common origin. And now, in a very real way, I had a deep awareness of our shared future. An awareness that I did not always have. During my time in space, I got into a routine where I would almost say goodnight to the Earth. When all my tasks for the day were over and I was getting ready to go to bed, I would go to the cupola and I would just gaze at the Earth for a while. And as I would take in this incredibly beautiful scene, I would think about our future. I would wonder, how far would we progress in the next 50 years in overcoming the challenges and problems facing us? Now, I launched into space with the belief that we already, right now, have all the resources and all the technology necessary to solve many, if not all, the problems facing us. So I spent a good part of my time Earth gazing, pondering the question, if this is true, why do the challenges still remain? Now, the seeds to the answer to that question were planted about 3 years earlier on the third spacewalk of my first mission. During that spacewalk, my feet were clamped to the end of the space station's robotic arm. And with me attached to the arm, it was flown through a maneuver that we called the windshield wiper, which took me across a large arc across the top of the space station and back. And at the top of this arc, I was about 30 meters above the space station, looking down at our incredible planet about 400 kilometers below. And the sheer beauty of that scene took my breath away. But equally or more compelling than the beauty of that scene was the incredible human accomplishment that the International Space Station represents. It's not only, one of the most, arguably the most complex, complicated structure ever built, but what's more important than that is it was built in space by 15 different nations. Some of these nations, as we all know, weren't always the best of friends. Some were on opposite sides of the Cold War, opposite sides of the space race. Some fought wars against each other and targeted each other's civilians in an attempt to break each other's will. But somehow these nations found a way to set aside their differences, set aside fear, embrace awe and wonder, and do this amazing thing in space. And as I floated there above the space station, looking down at this incredible sight, I wondered what the world would look like. How many fewer problems and challenges would we face if we could figure out how to have that same level of cooperation, that same level of collaboration, and bring it down to the Earth's surface? Now, the required collaboration that we need will cross industries, boundaries, and borders, and it will need to involve all sectors of our civilization, from governments to citizens to industries to investors. And this collaboration will help each of you overcome the big challenges that you're facing. As I said earlier, the world right now is filled with a lot of disruption and uncertainty. In order for us to not only navigate this storm, but to thrive in it, we need to challenge our perspectives. Now, I started out this talk by immersing us all in the awe and wonder of life in space. And I did that so that we can build this discussion on a foundation of awe and wonder. There are two primary drivers to action in our world. There's awe and wonder on one hand, and there's fear on the other. But only awe and wonder motivates long-term action. Only awe and wonder encourages cooperation, rational thought, and self-sacrifice for a higher good. So we need to move away from the fear-based mentality that is motivating so much of our actions, so much of our desire to overcome our challenges, and shift to an awe-based foundation. Now, overcoming our present challenges won't come from prescriptive policy or legislation alone, and it won't be found in the latest exponential technology designed to bend society and our planet's biosphere to our will. It will come about only when we finally embrace the truth that there's no them, there's only us. Only then will real progress and real solutions be possible. We need to look for the common ground. We need to find the things that we agree upon and use them as a jumping off point to start to address our differences of opinion. This mindset is what built and maintains the International Space Station. The partners that built the International Space Station made a conscious decision to set aside fear, embrace awe and wonder, and build this incredible orbiting outpost, probably the most complicated, complex structure ever built, and to build it in space. That should show that anything is possible when we set aside fear and we embrace awe and wonder. So this is the path to the solutions to our shared problems. So here's my challenge to you. In every thought, word, and action, strive to be a positive part of our required societal course correction. Every day, provide countless positive, unifying nudges to the trajectory of our society. You are more powerful than you can imagine, and together we are unstoppable. We can and we will overcome these challenges. Above all else, do it all in the spirit of awe and wonder. To illustrate that, I want to share with you the story of my return to Earth. When our 6-month mission was complete, my 2 Russian crewmates and I climbed into our space suits. We climbed into our Soyuz spacecraft, closed the hatch, we undocked from the space station, and we did a couple of laps around the planet. And as we crossed the south tip of South America, we fired the engines. And I remember seeing this beautiful crescent moon go by the window. When we fired the engines just enough to enter the upper atmosphere, we had this fiery, violent ride through the atmosphere at 5 miles a second. The parachutes opened. They threw us all over the place. Eventually, we smashed into the ground. And that video behind me was playing at slow motion, by the way. So he hit the ground pretty hard enough that we bounced and we rolled and we flipped over. And now the spacecraft was laying on its side, and my window was pointed down at the ground. And out of my window, I saw a rock, a flower, and a blade of grass. And I remember thinking to myself, I'm home. And what was really interesting about that thought, and what I realized right away, was I was home, but I was in Kazakhstan. And so to me, at that moment, my home wasn't just Houston, Texas, where at the time my family was waiting for me to return. My home was Earth. And our definition of that word home has profound implications for how we problem solve, how we treat our planet, how we treat each other. And broadening our definition of the word home does not come with a requirement to forget where we came from, our national, political, cultural, or organizational affiliations. It simply means seeing those things in the context of the bigger picture. Now, as I said earlier, I believe that the investment decisions that we're making right now, the business decisions that we're making right now, are powerful tools to affect real change. So, as a fellow crewmate on Spaceship Earth, I thank you all for what you're doing and for what you will do to help make life on our planet as beautiful as our planet looks from space. You don't have to be in orbit to have the orbital perspective, and by working together, we don't have to accept the status quo on our planet. So together, let's nudge the trajectory of our world to a more beautiful future for all. And with that, I thank you, and I wish you all the best for the rest of your conference, and for the rest of all of your objectives and all of your dreams. Thank you very much.
Hello, Ron. It's lovely to have you with us today in this kind of Q&A format. We've all just listened to the wonderful talk that you've done and seen the perspective that you have got that many of us will never be able to experience. And absolutely lovely, lovely footage. So I've got a few questions today. And let's start on the one on collaboration. You spoke about the International Space Station being a real effort in collaboration with so many nations working together. But there must have been some tough times, some challenges that you experienced. Can you just talk to us about some of the biggest challenges you faced while you were up there, and how you got to work together, and I suppose what are the things you have to overcome to collaborate and work effectively as a team?
Yeah, it's interesting. I did face challenges. We faced challenges as a crew. But there were things that I expected to be challenges that turned out not to be challenges. And one of those was working with an international crew on board the space station. And I think, one of the things people ask me sometimes is, in my 6 months in space, did we ever talk about politics? Do we ever talk about the problems that we have amongst ourselves as countries? And I can honestly say that in the whole time I was in space, I don't remember ever having one single political conversation. And it wasn't because it was off limits; it's because it was irrelevant. That's what those silly people down there on the surface of the Earth worry about, because we're up at such a higher vantage point, such a broadened perspective. And what turned out not to be a challenge was that interaction with international crewmates on board the space station. And I think that's because, as I alluded to in the video, we as crewmates, we as nations decided to set aside our differences, set aside fear, get beyond fear, and embrace on wonder and do this incredible thing together. And so the overarching mission became the focus point, which allowed us to, at times, forego our own personal desires and our own personal wants to make sure that the mission was going the way it was. What was challenging at times was dealing with the various mission control rooms around the planet. And I think that's because we were coming from different perspectives. The ground mission control rooms, whether it's mission control room in Moscow and Houston or Europe or Japan, they have one perspective. And we on board the space station have another perspective. Neither perspective is right or wrong, they're just different perspectives. And when we when we got into trouble is when we locked into our narrow perspective and only saw things from our perspective and didn't empathize with or understand the other's perspective. That's where things got into problems. And in those instances, what we failed to realize was that the very diversity of our perspective is a source of strength. When we see things from two different perspectives, we see them in stereoscopic vision. We start to see the depth. We start to see things in 3D. So the more perspectives that we could provide to a challenge, to a problem, the deeper our understanding of that challenge, the deeper and the more long-lasting and the more effective will be the solutions that come out of that diversity of perspective. And so, right now, and all across the world right now, we are locked into our narrow perspectives, and that's created a lot of divisiveness and polarization. And again, that's all across the world. We're seeing it. We're seeing it everywhere, and that's because people are not embracing the truth that strength comes from diversity of perspective. And people need to realize that just because somebody or some nation or some organization has a different perspective than you, that doesn't mean that their perspective is wrong and your perspective is right. It means a lot of times, most of the time, that it's just two different ways of seeing the same thing, which again gives us that depth of understanding. And so I think that's one of the big challenges that we had to overcome. We were all harmonious on board the space station because we all had the same perspective. It's only when we got outside of that our perspective that things started to break down.
Yeah, there are many words of wisdom in that answer you've given now. And the theme of perspective comes through a lot in what you've said and in your talk. And I'd like to bring what you've said closer to home for South Africans and people listening today. South Africans have always felt like we have a lot of challenges here. In your talk, you said, the world faces a lot of challenges, individual countries do, but somehow when you have a home focus, you always seem to think it's worse here. And what can you say to people about having perspectives in their individual lives? You've spoken about that in the context of working as a team, but just in your individual life, how can you rise up to that place of awe and wonder that you spoke about, to rise above a narrow perspective, to see things differently without negating the real challenges that we do face?
Yeah, I think when you zoom into an individual's life, there's a number of things that become really, really clear. The first thing is every single person on the planet, I don't care if you're the richest person on the planet, the poorest person on the planet, everybody faces challenges, everybody faces problems, everybody has obstacles they have to overcome, everybody is dealing with things. That's part of life. That is life. And so the first thing I think we need to understand is that we can't change what is. What is what is. And so the first step to being able to overcome challenges is to accept what is. We have no control over what is. We have no control over what was. All we have control over is this moment in time. And what this moment in time gives us the power to do is to make a course correction and change our trajectory, which will change what will be. And so a lot of times people get overly focused on what was, overly resistant to what is, and overly frightened about what might come. What the possible negative aspects of extrapolating out this present situation will become. And so just like we don't have control over what is and we don't have control over what was, we don't actually have control over what will be either, except for the connection point between what is happening right now and what will become is what we do in this absolute moment right now, this specific moment right now. And so, and that has a lot of applications or similarities to the space business. When we launched the space, we're strapped to 4.5 million pounds of explosives, and it's a very, very dangerous situation, or it could be. And if we were to extrapolate out every disastrous thing that could happen, we wouldn't be able to function. And so what we need to do on a spacecraft as we launch to space is block out everything that we don't have control over and focus on the things that we do have control over. And I think that's really important. The other thing to realize is that another aspect of perspective is how you view things. I mean, that is the definition of perspective, is how you view things. But one aspect of that is the emotional aspect of that, right? And so if you look at the challenges that you're faced with in your life, the problems that are in your life, and you look at them as enemies, that's going to put you in a different perspective than if you look at them as opportunities. Because every challenge, every obstacle, every discomfort that we face is an opportunity for growth. It's hard to look at it this way, but it's the truth is they're gifts. They're gifts for us to grow as humans, to grow in understanding, grow in love, grow in empathy, So every challenge that we face, if viewed as a gift, because that's what it actually is, um, your approach to the problem-solving process will be completely different. It will be positive based. You'll be more open to cooperation and collaboration. You'll be you will expand out as opposed to contracting in. And so if we allow our obstacles, our challenges, our problems, whether in our own life or as a nation or as a world, to cause us to contract, to shrink down, we're limiting the possibilities. We're locking ourselves into those things. We are surrounding ourselves, imprisoning ourselves within those problems, within those obstacles. If we allow ourselves to expand out, then those problems and challenges turn into the rocket fuel that propels us to a higher vantage point. And I think it's again, we've said it over and over again, it all comes down to perspective.
Ron, thank you very much for joining us today. It's been a real privilege to speak to you. And thank you again for all the lovely footage and experiences that you shared with us in your talk.
It's been my pleasure, Monene. Thank you very much.
Thank you. Investing requires patience. We've already seen heightened volatility this year as the market grapples with some of the risks that we have spoken about. But there's still valuation on offer and the ability to generate real returns in what feels like a very uncertain environment. So our key message is that we're building portfolios that are diversified, that are taking advantage of the valuation opportunity that is on offer, and ultimately it's about staying invested. Thank you to everyone that has joined us today, and we look forward to hopefully seeing you in person in the coming year.